Hey guys, welcome back to the channel. In this video, we're going to go over a midweek stock market update. We're going to talk about what happened yesterday in the market. We're going to talk about what might happen today, and then break down the charts moving forward. So before we get into it, just to reiterate, not a financial advisor. Make sure that you do your own research. Also, if you find value in the video, smash the thumbs up button, subscribe to the channel if you enjoy our content, and hit the notification bell. That way YouTube can let you know every time we release new content. So let's get into it. Yesterday, the inflation numbers came out, and it actually came out higher than expected. So the year before, not the year before, the month before was at 8.1 to rose to 8.3. Okay, and the market saw that extremely bearish, and the markets had a very, very bad day yesterday. And you see the S&P 500 was down 4.32%, down roughly about 178 points for the day. The NASDAQ got kicked in the teeth, 632 points, about 5%. And then, of course, the Dow Jones, 1,276 points, roughly about 4%. Basically, its worst day since June of 2020. Okay, and this morning, I believe the PPI numbers come out, and this is going to show us, how expensive things are basically for the businesses and manufacturers to make. Okay, it showed on Tuesday how expensive it was for us to buy them, and are the costs, going up, coming down, or staying the same. And obviously inflation rose, and the more the government keeps printing money, it's probably not going away until that kind of slows down and they change some things up, regardless of how many rate hikes Jerome Powell wants to come in and do. But you want him to do that, obviously, because it's going to supposed to help inflation. However, as you saw on Tuesday, that if you got one person or one organization trying to help battle inflation, but you have the entire administration just doing stupid stuff and printing money out of thin air, which is actually what causes what's causing inflation. So not sure what to say about that, Ian. But let's take a look at the charts. I just want to break them down and show you each. I want to show you the S&P 500, the Dow, and the NASDAQ really quickly. So taking a look at the S&P 500, we basically, guys, pretty much, we haven't given away all the gains from our rally, but we're pretty close to it. And I'm pretty sure that we'll probably fall down eventually and test the low right here of 38.89, which would basically take away every single gain that we had this past week. Okay, as you see, we bounced off of 38.89, got all the way up to 4,100, and then some huge red candles yesterday, and we actually broke below that red SMA line. So if we bounce off of this again, assuming that might be a good sign, but yeah, I kind of think that we'll test that again. But yeah, gave away every single gain that we had from last Wednesday. If we look at TQQQ, that's going to be pretty similar. I think this one actually has potential to go lower than where we started at from that little rally. So our rally was at about pretty much right at exactly where we are now, and we rose all the way up to $32. Got rejected, obviously, at the red SMA line, and your overall support here is 21.32. I think that we could actually potentially pull down and go to 21.32 here, and as you see, that's the low on the 180-day 4-hour time frame. This is actually about to update because the time frame. So in a couple of days, this will actually go away, and your new high will probably be about 79 bucks, opposed to 88 bucks. Looking at you down next, and I haven't actually looked at this one in quite a while. So it's going to look pretty similar, right? So if you see here, the gains, every gain that we had from last Wednesday to Monday, that all went away within the span of one day. So what it took about 7 days to create went away in one day. Okay, so this morning the PPI numbers come out. If those are negative, I'm not sure that's going to make the market be that dramatic. However, if they are showing that things are still going up, it could have a negative effect on it. I just don't think it's going to be as negative as it was for the CPI data, but that remains to be seen. So let's take a look at the VIX, and let's take a look at the futures for this morning. All right, guys, so taking a look at the VIX, VIXCentral.com. currently at 2662, which is not nearly as high as what I thought it would have been after yesterday. Typically, you want to see this thing around 20 or below. So I would expect it after that bad of a day, maybe closer to 30. Okay, or maybe it actually got closer there at one point yesterday and kind of settled down, but I would expect it to be a little bit higher than what it is now, right? So, and this number here, typically you want to see it in the ones, maybe the twos, and I think yesterday was probably in the negatives, but now it's 0.76, which is a good sign that the markets may be looking to open green this morning, which looks like it will. And I think it's going to be kind of a similar situation to yesterday, though. I think that once the numbers come out, if they're negative, we can turn red within the blink of an eye, right? So that's something to kind of keep an eye on here today is how did the PPI numbers come out, and just kind of keep an eye on really this website here at about 7:30. I want to say that the PPI numbers, if it's the same time released as the CPI, then about 7:30 a.m. Central Standard Time, 8:30 Eastern, you can come back to this website and check it. That's what I did yesterday, and we were slowly, like barely green yesterday, and as soon as the numbers came out, we turned red immediately, and we're down like 300 or 400 points right here within the blink of an eye. It was crazy. So just keep up with that. But some of the plays that I was really impressed with that kind of held their ground yesterday. I mean, they got hit, but not nearly as bad. Amazon, Tesla, and several of the other large cap stocks actually didn't look that bad considering the market was getting demolished. So that was actually very encouraging for me to see that the strength of those stocks are still there, and they didn't just roll over and die. Basically, they may go a little bit lower, yes, but it was good to see that that they kind of held their ground in a very, very rough day in the markets. The fear and greed index, we are currently in fear, and we could go lower. I'm really surprised we're not further down on this little bar here, because we were neutral yesterday and we had that big dump and we're barely in fear now. I'm really surprised we're not closer to here as of this morning. But market momentum overall, as you see, it's kind of measured by different metrics. Market momentum is in fear. As you see, we got rejected from that red SMA line. So just basically looking off the charts, it makes me think that we do have some more downside from here on stocks, so it's kind of remain yet to be seen. So anyway, the larger cap stocks, some of your longer term plays, they're providing some good buying opportunities and could provide better buying opportunities. You just have to kind of wait it out and see how it goes from there. So anyway, guys, that's my video for today. Let me know your comments below. Other than that, we'll catch you in the next one.